Well, a very good morning to you all. I'm Craig Martin. I'm the chairman of Dynam Capital, and Dynam Capital is the investment manager for Vietnam Holding. Real pleasure for me to be in the UK, in London today. We've just completed the AGM, the annual general meeting for Vietnam Holding, and what a week it's been. So it's a pleasure for us to host this short webinar this morning to give you an update on Vietnam and on the fund and the prospects and the outlook. The usual disclaimers apply. Well, this time last year, we were delighted also to win an award in London, the Citywire Award for Best Emerging Market Single Country Fund. And that's the picture on the left. And just this week in London, we were also delighted and honored to win the award again for 2024. So Vietnam Holding as the Best Emerging Market Single Country Fund for 2024 under the Citywire Award. So it was very nice to be at the award ceremony. We thought it might be too close to call, but unlike, or in the similar vein to other elections this week, we won with a strong outcome. I think recognizing the outperformance of Vietnam Holding against its indices over the longer term. So as a team, we're delighted to accept that award. For those that aren't familiar with Vietnam Holding, we're a closed-end fund listed on the main board of the London Stock Exchange. Our market cap is about £100 million, and we're part of the FTSE All-Share Index. Our discount to net asset value is the narrowest of any of the funds listed in London. And obviously, many closed-end funds trade at discounts to net asset value. I'm very pleased to say that our discount is very low. It's during the week, early part of the week, we traded at parity, and I think we're about 1 or 2% discount to net asset value. And that's the hard work also of our independent board of the company, implementing share buybacks over many years. And then this time last year, with the shareholder approval, we put in place a very unique, innovative annual redemption facility. Now, that gives shareholders the opportunity once a year to redeem their shares at NAV. And we've just concluded last month the first annual redemption, and we had about 12.5% of the company redeemed. And we're very pleased with that result. And we're very pleased that having this facility has been welcomed by shareholders. And we think that's contributed to the significant narrowing of the discount between the net asset value and the share price. For us as a manager, we're very aligned with the success of our investors in Vietnam Holding. We're a partner-owned team. We're locally based in Asia, almost all the team in Vietnam. And over more than 15 years now, we've been able to demonstrate strong outperformance. So outperformance against the indices in Vietnam, and outperformance also against other funds that are investing with similar strategies in Vietnam. So on average, about 500 basis points, 5% of alpha, outperformance against an index. And on a year-to-date basis, even today, we're about 16% up year-to-date. The index is probably about 9 or maybe 10%, and other funds somewhere between 5 and 10%. So we're strong leader in outperformance, and I think that's what's been recognized by Citywire and others. For us as the fund manager, we also have received the Citywire AAA rating. We're the only fund outside of Japan to have that level of award. And this is by doing simple things well. We're not trying to be too clever or too sophisticated. We've got a relatively concentrated portfolio of about 23 good Vietnamese companies. We don't use any gearing or financial engineering in our portfolio. We just know our companies well and have constructed a strong portfolio based on good companies that can compound their earnings. We measure lots of things. Obviously, financial performance we measure in terms of our portfolio companies. But we also track the carbon footprint, and we've been a signatory for the United Nations Principles for Responsible Investing since 2009. That was just 3 years after those principles were established all that time ago. And we use ESG as a tool to help us in select good companies, but also to engage with the management teams of our businesses. We're not the largest fund manager on the planet, but we're very nimble, and that's delivered our outperformance. And we do have very close engagement, however, with our portfolio of companies. One of the reasons that it's a relatively small portfolio size in terms of number of companies. And we're very nimble in terms of our portfolio selection and our portfolio construction, but also nimble across the size of opportunity. We can invest in small companies, medium and large companies in Vietnam, and we can invest across different sectors. But fundamentally, we're looking for great businesses, good management teams with whom we can engage and journey, so they're better managed in terms of ESG, and look to generate outperformance on the long term. So we're not an index fund. We're looking at active positions, employing that nimbleness across the opportunity set that we see in Vietnam. And Vietnam has a tremendous opportunity set. As you can see from the map, and if you haven't visited Vietnam, please come. It's both at the heart of Southeast Asia, which is the Association of Southeast Asian Nations, or ASEAN, but it's also at a very important junction of North Asia, China and Taiwan and Japan and Korea and other larger, more developed Asian countries are key partners with Vietnam in its growth over the last number of years. It's a young population, half the population under 33 years of age, and it's a driven population. Vietnamese people are very hardworking, they want to succeed, and they've done a tremendous job as a country over the last 30 or 40 years. And particularly by putting a lot of emphasis on a couple of things. One, on education, a high literacy rate. Also in Vietnam, 40% of its graduates coming out of universities are coming out with science, technology, engineering, and maths, or STEM subjects. That's twice the global average. And that bodes well for the future as Vietnam creates a digital economy. It's seen increased level of internet penetration. A couple of years ago, Vietnam had more Facebook accounts than bank accounts. That's changing, but the e-commerce growth is significant in the country, one of the highest in Asia. Vietnam chose to be a very open economy in the early 1990s, adopting a policy of open door, or do moi. And that has seen tremendous levels of foreign direct investment into Vietnam, which reached record levels last year in 2023 and record levels again this year. So Vietnam is a friend to many countries. It's a friend to its North Asian neighbors, a friend to China, but it's also a friend to the US and a friend to Europe, and has positioned itself as a great manufacturing place for export to many countries around the world. And that level of foreign direct investment, the growth in the economy and the industrialization in the economy, have seen the wealth of the people increase. And the GDP growth has been averaging 6.5% per annum over the last 35 years and reaching reasonably high levels. And the government aren't sitting on their laurels. They want to see Vietnam become a wealthier country. They want Vietnam to be the made in Vietnam, the key part of the world's supply chain, and to see the wealth of its people increase. So for us as an investor, it provides a very interesting backdrop to a few key themes. The theme of industrialization as the economy modernizes, the theme of domestic consumption as the people get wealthier and have more choices around where they want to consume, the urbanization theme as Vietnam's cities get bigger and the services in those cities and the modern trade and the modern economy linkages in those cities creates great opportunities for investors. And as I mentioned earlier, digitalization. The cost of laying fiber optic cable and connecting Vietnamese people is low relative to other parts of the world. And people are getting affordable, high-speed bandwidth. And Vietnamese corporates are also digitalizing, but also learning how they can play in the global digital economy. A lot of emphasis on AI, on data centers, and also in providing software and services to the world. So Vietnam's manufacturing growth has been incredible, and going back decades now. Vietnam has a hardworking population, as I've mentioned, and a relatively low-cost workforce, and yet productive. I think for some manufacturers, they find the failure rate in Vietnam is a lot lower than some of the other larger Asian manufacturing countries. So that bodes well for Vietnam to continue to cement its position as a manufacturing center. And a lot of that manufacturing, of course, is for exports. And exports are close to 100% of GDP and have been growing exponentially since the early 1990s and that open door policy that I mentioned. And with many free trade agreements around the world, particularly to the EU, we're seeing tremendous pickup in exports of all ranges of categories. So the table on the left shows the many different kind of categories and their high double-digit growth rates. So it's quite a diversified mix of products. When I first went to Vietnam in the early 1990s, it was to source furniture, so manufactured items for UK and European customers. And things such as furniture are still manufactured in Vietnam, but obviously a lot of textiles, a lot of footwear, as well as high-tech goods, significant manufacturing base for computers, electronic products, and mobile phones, and for our digital life, as well as agriculture, so foodstuffs that get exported globally. Vietnam's a massive seafood exporter. Many of the seafood products you see in terms of shrimp and some white fish that we see in the supermarkets in the UK come from Vietnam. So a diverse mix of products, not dependent on any one particular category, and also a diverse mix of trading partners, this friend to all, servant to none. And obviously the other big news this week, in addition to us getting an award, was an election in the US. And people are looking to see, well, what does that mean? And obviously it's still very early to say, but having a diversified trading partnership with North Asia, as well as with China, the EU, as well as the US, could help countries like Vietnam perhaps suffer some of the buffeting of any antagonistic trade policies that countries may seek to put in place. So Vietnam's attracted a lot of this foreign direct investment, or FDI. It's been a tremendous growth driver for Vietnam, and it's continuing. We're seeing many manufacturers move some or all of their production from other parts of North Asia, including China, to Vietnam. Now, some of that's for labor advantage. They're looking for the lower labor cost. They're also looking to be plugged into Vietnam's ecosystem. They're also looking to take advantage of Vietnam's free trade agreements with the rest of the world. So foreign direct investment is very welcome, but increasingly we're focusing on what happens domestically. So public investment, this is Vietnamese people's money being channeled into productive infrastructure in the country. And that has a multiplier effect on economic growth. And we've seen that reach record levels in the 9 months to this year. But we also see very positive signs that this will be a key focus of the government going forward, 25, 26, and 27. Some of this are more modest projects around road improvements, improving ports, and then some are much larger projects, including new airports, subway systems, metro systems. And then more recently, a lot more discussion around mega projects. So if you've been to Vietnam, or if you haven't, the train trip from Ho Chi Minh City in the south to Hanoi in the north is well worth taking. Set some time aside. It's about 36 hours. It's about 22 hours to go halfway up the country. So there's an opportunity in the future for a much faster rail link. Huge project, probably $60 billion, and it's going to take a lot of time. But it shows that the government is thinking about more public investment. And very recently, the head of the Vietnamese government, the general secretary of the party, To Lam, is saying he's looking at ways to improve the efficiency of that, how to address some of the bureaucracy, how to address some of the red tape, perhaps how to slim government down a little bit in order to make faster decisions. So that bodes well for the longer term. So this high, stable GDP growth over the last 30 years is pushing Vietnam well above its weight into a large economy. It's got both the domestic resilience in that large population, as well as that position as an exporter to the world. So it's got two legs which are providing support to its platform for growth. This then translates into an accelerating GDP per capita. And we've illustrated in a chart on the right, which we've shown before other webinars, that's seen the inflection point that other perhaps newly developed economies 20, 30 years ago reached and then accelerated from. So China in the north in point, but also Thailand and other parts of Southeast Asia. You see a rapid increase in the consumption and in the per capita GDP. And this tends to be followed by an increase in modern trade and more brands and more opportunities for consumers, but also for the service sector. And that's a great investment opportunity. So the middle class is growing. It's aspirant, traveling domestically, traveling internationally, looking at brands, looking at products and services that we've taken for granted in many countries over the years. Over the last 20 or 30 years, Vietnam's gone from having perhaps just imported brands, and now it's got strong domestic brands as well. So that consumer economy is growing, and it's fueled by digitalization. So that internet economy is growing rapidly. And the modern trade, so supermarkets, mega markets, convenience stores, is an increasingly significant part of the retail universe. And you can imagine that a number of fragmented kind of mom and pop businesses that you would have seen in Vietnam or other parts of Asia, if you've traveled to Asia, they get changed and transformed into chains and brands. And that's good for us as an investor. And the urbanization, longer term, Vietnam's going to be a place where there's going to be significant demand for more real estate, as the urbanization rate is still low, still got a long way to go. China was at Vietnam's level of urbanization more than 20 years ago and then doubled again. Some might say China's built too many houses and can take some time to catch up. Well, Vietnam's slightly different. There's demand for quality housing. There's demand for affordable housing. And so that sector is a tremendous opportunity in the long term. As the cities grow, it increases productivity and labor pooling and economies of scale. And so again, that leads to the acceleration in per capita GDP that we alluded to previously. And also the rapid urbanization makes the requirement for modern trade more necessary. So you can put in a piece of infrastructure, then a town community and the supermarkets and the schools and the hospitals. And that creates a lot of service growth and opportunity. Oops, got ahead of myself there. So we play the opportunity in Vietnam through Vietnam Holding in the equity market. So we're looking at companies listed on the Vietnamese stock market. And we're not the only people looking at those opportunities. As you can see in the chart, there's been a significant growth in the activity in the stock market over the last decade. And actually, the stock market's still young. It's only 2 decades old. Now, today in Vietnam, there's more than 8 million retail investors, that's domestic investors, which boosts liquidity. That's 8% of the population. That's more than in the UK. That's more than in Europe in terms of stock investors. And so daily liquidity in the stock markets at levels that are 4 or 5 times where it was just a couple of years back. So that bodes well. And even at these valuation levels, and partly because it's more of a domestically driven investor universe, we see tremendous opportunity still. Valuations are not demanding, and yet there's good growth. So if you were to put us in a box in terms of a category, we're looking for growth at a reasonable price or a reasonable valuation. So we're looking at earnings per share growth in the market of maybe 15%, but in our portfolio, probably about 20% for next year. And yet the price earnings are relatively attractive at 11, 12 times for next year. And if you're allocating to Asia more broadly, Vietnam stands out as an attractive opportunity. Cheaper on a relative basis, on price to earnings, and also on a price to book basis. But Vietnam is still a front market, but it's making changes. And just this week, putting into place, removing some of the obstacles, removing pre-funding, which means that passive funds will be able to do more in Vietnam. And that's important for the rating agencies and the index agencies, such as MSCI and also FTSE Russell. So removing some of these obstacles should help Vietnam get accepted into the emerging market space, more formally defined. So for FTSE Russell, it's already shortlisted on the secondary emerging, and we think that there's a very good chance that next year Vietnam will be included in the FTSE Russell, primarily because it's taken all the steps to address the pre-funding and making it easier for large institutional investors to transact in Vietnam. MSCI emerging market status is probably still some way off because there's still a large part of the index which is in companies that are already at their foreign ownership limit. And for MSCI's constituents, that's a negative. But FTSE Russell is a good chance of getting an upgrade for 2025. So as I said at the beginning, we don't try and do things too cleverly. We're not trying to use financial engineering. We're looking at traditional ways of stock picking, finding good companies, combining the top-down opportunity with bottom-up good companies, conservatively valued with management teams. They may not be perfect, and they may not get 100% on our ESG scores, and we rate all of them on our ESG, our proprietary database and scoring of how they're doing on environmental social governance as a tool to filter and select the good from the great. However, we identify where they can improve, and we meet with the management teams of the companies, the CEOs and the boards, and we check in with them, how they're doing, what their struggles they have, and how we can help as an investor. And I think we've certainly seen some great progress of some of our core holdings and good engagement with each of them. Again, as I mentioned at the beginning, we're not an index. We're looking actively at our portfolio, and we can be very nimble in rebalancing our portfolio when that's called for. We don't sit idly by, and we're looking to make sure that we're driving the best portfolio return for our investors. I mentioned at the beginning the key themes: industrialization, urbanization, and domestic consumption. I didn't mention specifically the banks. Well, the banks do play a key part of what we do. So in emerging economies, the financial sector and the banks are themselves a leveraged play, so to speak, on the growth of the economy. And we've got a number of very interesting banks. Vietnam is an underbanked country, and yet it's trying to catch up quickly, particularly with digital banking and digital services. So we're trying to find these kind of champions in the banking sector, and they're still at very affordable prices in terms of price to book, with very high levels of earnings per share growth. So banks and financials do make up a good portion of our portfolio, but they're also underpinning each of the other sectors. They're providing the capital for people buying the houses. They're providing the capital that's financing the trade and the expansion and the project financing, as well as consumer finance more broadly defined. So we think our portfolio and our portfolio construction is robust, and we think the prospects are attractive for the future. As we look at our top 10 holdings, just a couple of things to make an observation. For the eagle eyes, you can see on this chart that our cash position at the end of September seems high at 12.5%. Well, that's because we had our first redemption this year of about 12.5%. So that's an anomaly in terms of the cash level. It's normally 1 to 2%. We've got a concentrated portfolio, our top 10, 56% of the portfolio. Good names we know really well. We've got, say, 23, 24 names in the portfolio at any one moment in time. We've then also got maybe another 25 companies in the wings. Some businesses that we've already invested in before, that we've taken profit and we're waiting for them to get a new catalyst for the next phase of their growth. Or businesses we've just been doing a lot of research on for many, many years. And we've got a few key points that when they hit those targets, that's when we will start to include them into the portfolio. So again, that plays to the fact that we can be active and nimble across our stock selection. This chart's a couple of months old, but really it's to show that outperformance against the market, more broadly defined. So Vietnam Holding, on its 1 year NAV total return at that point at the end of May was 25, almost 26% up against the index. And year to date today, on fresh numbers, we're at 16% increase in NAV against our closest London-listed peers. But I would say one of the points just to highlight on this chart is the work we've been doing around moving to get that discount narrowed. And today it's about 1% discount. And as I say, on Monday and Tuesday, we were trading briefly at a small premium. So that hard work from the board and us as a manager has played off, and we're really delighted that investors have seen the benefit of that. I just want to take a few minutes to give some highlights on a couple of our companies. I know people are interested in what's in the bag, what's in the portfolio. And then at the end of that, I'll close for some questions. So just going to a couple of our portfolio companies. So FPT, Digital Champion. It's been our number one holding for many years and is a standout both in terms of the domestic IT market in Vietnam. So that's connecting companies, digitalizing businesses in Vietnam, but more importantly, selling software overseas. So it's about $1 billion worth of software to Fortune 500 companies around the world, so in the US and in Japan. And it's got ambitions to increase that by 5 times in a short scale. It's also a domestic champion in broadband, going to the consumer and pay TV. And very interestingly, has a very large and successful education business. I mentioned earlier that 40% of Vietnam's graduates come out of science, technology, engineering, and maths. And FPT has a significant client base of students learning science, technology, engineering, and maths. It's both for its own purposes, but also obviously for the economy more broadly defined, seeking to find areas in semiconductors, in AI, as well as software development for the world's big companies. So FPT is a great compounder, top line, bottom line growth, 20%. And we're delighted to have FPT as our number one position. They joined us for a webinar earlier in the year. Please do feel free to look at that and access that through our website. And then here's a company familiar to many, maybe, a Mobile World. It's an omni-channel retail champion. Bit of a mouthful, but it started off successfully in the mobile phone accessory business. It's got more than 50% market share, and then moved into domestic electrical appliances with more than 50% market share globally in Vietnam, and then has been building and refining its model in the grocery business, which is probably $100 billion business in Vietnam per year. So it's pushing into that market, and is increasingly an omni-channel, so online to clicks as well as bricks in terms of meeting customer needs. So if it's successful in the grocery business, we think there's terrific growth ahead. It's starting to see some margin improvement and growth in that business. And so that could be providing it with a new catalyst for a significant level of growth. And then finally, logistics, business to business services. So if you imagine the foreign direct investment, the manufacturers coming to Vietnam to build stuff for export, well, you need logistics, you need seaports, you need air cargo. And Gemadep's a key player in that space. It's seen tremendous growth in capacity utilization in its ports. It's also seen an increase in the rate it gets for charging for its services. So the combined effect is significant growth in profit in its core businesses. It's also looking at opportunities perhaps to divest some of its non-core businesses. And we keep a close eye on the performance there. But Gemadep has also worked with us in terms of looking at how they do more, measure more, report more in terms of ESG. And we believe they're on the right track on many of those initiatives. So that's the end of the update. As I say, I wanted to give an update on the portfolio and the prospect and how we look at the market. And I'm very happy to take questions. I can see one question that's come through the Q&A box. Obviously, a very timely question. Unsurprisingly, how can the Vietnam economy be influenced by a Trump presidency? Well, the world's looking at this, isn't it, to see what happens when Trump steps in on the 20th or so of January. I think it's it's not a clear picture globally, clearly. I think there's some positives that we can see, and there's some negatives that might come through as well. On the positives, I think the last time Trump became president in the US, there was very much this inception of China plus one, a big push for manufacturers trying to uh, rebalance their global supply chains and do more in Vietnam. We've seen that really increase over the last 5, 6 years, and that's probably likely set to come. So that will increase opportunities, I think, in industrial parks and the services for these manufacturers. Perhaps on the negative side, obviously Vietnam isn't an open economy. It's a big trading economy. And therefore, if tariffs are put in place, that affects Vietnam as it does every other country. But probably if those tariffs are more oriented towards China, then again, Vietnam may have some room to benefit from that as well. But let's see in terms of all of these plans that come when they come into place. But I think Vietnam's been very clever in terms of building strong relationships in the US, as well as strong relationships in China and the EU. And To Lam, when he wore 2 hats earlier this year, General Secretary of the party, but also as president, he went to China, he went to the US, he went to Europe. And last year, I think we reported to investors that we saw many meetings in Vietnam. We saw Biden from the US, we saw Xi Jinping, and even earlier this year, we saw Putin comes to Vietnam. So Vietnam is able to play this global walk on the global stage and build these partnerships. So obviously early days for what a Trump presidency means globally, but clearly he's signaled trade something he's going after globally, and therefore Vietnam, Mexico, China markets that contribute to the US deficit will probably see some tariffs, but we suspect more of those headed towards China. I think there's a question linked into that, a question from Joe saying, what would be those impacts? So in addition to what I've just mentioned, I think the other highlight would be more manufacturing in Vietnam. So yes, there might be tariffs, but a lot more of the global and the regional manufacturers would be encouraged to move to Vietnam. So I think that's going to bode well for, again, for the industrial real estate opportunity. There's a question here, what are we doing differently? I think that's alluding to our outperformance. Well, doing simple things well, I think being nimble and being super focused. And we're a small team, very focused and dedicated to what we're doing for Vietnam Holding. And over many years now, we've demonstrated outperformance against the indices. So we'll continue that. And I can see a question mentioning our AGM, which was earlier this morning. Thank you to shareholders that participated and voted at that AGM. All the resolutions were passed unanimously. There was a question about one of the specific resolutions, which was to amend the investment policy. That's an interesting point. When the company was set up many years ago in 2006, there were limits around we couldn't invest more than 30% in any sector, and we couldn't invest more than 10% in any single company. What we've recognized is, the world's moved on and Vietnam's moved on a lot since 2006. So to give more flexibility to what we do, we've sought approval from shareholders to increase the single company investment limit up to 20% and the individual sector up to 40%. That doesn't mean we're going to change anything overnight and change what we do. It just gives more flexibility to adapt, look at the broader investment opportunity set in Vietnam. These companies get bigger and sectors grow and new sectors emerge. So we just want to be ready, and we want to be continue to be nimble about the opportunity set to deliver good value through to our investors. I think they're the most questions. Obviously, it's the uncertainties globally around what a new president means, and that's something we'll be looking at very closely. But if history is an indicator, and the last time Vietnam was a strong winner of perhaps the push against China, Vietnam's done a lot to make sure that it's well positioned globally, and the Vietnamese people are tough and determined. Don't bet against them, and it's a great place with strong economic prospects for next year. and we're looking to deliver good continued value for Vietnam Holding. We're always keen to meet with investors. I've been in London just these last few days. We're in Europe maybe 3-4 times a year. If you do want to get in touch, reach out to us. Details are on the page, or contact us through the website. We are very responsive. And we update regularly monthly fact sheets, so make sure you can avail yourself of those. Copies of those are also on the website, vietnamholding.com. So I'd like to thank you for your time. Oh, sorry, the one more question. Again, I think this is linked into what's changing geopolitically. FPT, our number one position, what's its exposure to the US? And would it suffer if the US kind of isolated itself? Well, interestingly, for FPT, a lot of its exports are to Japan. Japan's a big, obviously, modern economy in many ways, but it's got quite a lot to do in terms of upgrading its core banking systems and a lot of its, perhaps, software infrastructure. And Japanese software engineers are expensive. Vietnam has thousands of, FPT has thousands of Japanese-trained Vietnamese software engineers in Japan, helping those companies. So FPT has been very clever in terms of its global footprint. It has offices also and companies in the US. So it's positioning itself around that and is looking to work with US companies in AI, in semiconductor. So I think Vietnamese companies are encouraged to look not just to one country, and they've been looking and broadening what they do and diversifying their services. So I think FPT is going to continue to be a beneficiary of the global trends of digitalization. And remains to be seen, obviously, if there are any specific blockages, but we've seen in the Semiconductor Act that came in under Biden, trying to move manufacturing back to the US, that Vietnam still has a great role to play in that. One country can't do everything on its own. And, you know, economies in countries like Vietnam that are looking to make themselves key parts of the supply chain and be friendly parties to that still have a great runway ahead of them. Okay, well, with that, I don't see any further questions. If anyone has questions, please do contact us, and we will reply to those as soon as we possibly can. And I'd like to thank you all for attending and wish you a very good day and a safe weekend ahead. Thank you.